What's up, homies? Welcome to another episode of the Homeys Real Estate Podcast. It's your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together, we're going to break down this crazy real estate market. It's the beginning of the month. The numbers for March just came out. What time is it, Angel?
It's market update time.
Time to go over the market update. So we're going to go with Los Angeles County. Per the usual, I'm going to go rocket rounds, go over the data really quickly. We'll dissect it, and then afterwards, we'll give our projections and give some advice for the future. So let's hop right into it. And median sales price increased quite a bit, surprisingly, even though interest rates are on the rise from $835,000 in February to now $870,000 in March, $35,000 increase. When we look at median price per square foot, another indication of whether homes are actually increasing in value, yes, they are. They increased from $577 per square foot in February to now $594 in March 2022. So that's about a $17 increase, up 15% year over year since last March. When we take a look at the amount of active listings on the markets, we can see that they are increasing, right? We do have around 8,420 active listings as of March, but that's still a lot less than what we had a year ago. Last March, we were looking closer to around, It's around 10,000. So you can see that we're about 30% less than we typically saw a year ago, and then about 50% less than what we've seen from 2017 to 2019. So we have a lot less active listings on the market. When we take a look at inventory month supply, how long does it take for the current homes on the market to be sold if no more homes were listed? Right now, we're looking at about 1.4 months. This is extremely short. In a balanced market, we're talking about 5 to 6 months. In a buyer's market, we're talking about 6+ months. So you can see that we're in an exceptionally strong seller's market. Now, let's look at the median days on market. How fast are homes selling? Median days right now is 9 days on market. So this ties our record for the lowest days on market. So yes, you need to be pre-approved. You need to make strong offers because these homes are flying off the shelves. And then lastly, let's just look at closed transaction volume, right? The amount of home sales multiplied by sales price gives you that closed volume. Right now, we're looking at about $15.1 billion as of March 2022. That's again for the month of March only. That's a record for March. That's up about 3% from a year ago. So this is your, rocket round market data. Angel will caught your attention the most out of this.
Two things: the increase, how much home prices increased in 1 month. That's insane. And then that we're back below 10 days
on market. Yes, that's ridiculous.
That's a record.
Jeez, right?
Yeah.
Insane. Yeah, I mean, what's amazing is that interest rates are on the rise. It's no secret now. If you're a home buyer, you know that interest rates were at one point around 3%. Now they're closer to 5%, right?
No, they're in the 5. They're not closer. They are in the 5%.
In the 5s now. And
conventional loans are even approaching 6% in some scenarios.
Yes. And nonetheless, prices are still going up. Nonetheless, people are still bidding more for homes, knowing that their mortgage is a lot more expensive than it was just a few months ago because interest rates are higher, right? So that's the craziest thing to me about this. I mean, I don't know how much more home prices can continue to go up, knowing that interest rates are still increasing. There's something that I wanted to bring to everyone's attention, and this is the amount of closed sales. So we always hear this narrative, right, that the reason homes are increasing in value is because there's just not that many homes for sale, right? There's not as many people that want to sell their homes. And no, that's not true. The truth of the matter is that there's about the same amount of home sales that we've typically seen in the last 5 years. It's just that homes are selling a lot faster. So here I'm looking at a chart for closed sales. And we can see closed sales in March 2022 is 6,060 closed sales. We'll skip 2020 because that's an anomaly, right? Because it just was a weird year. But we'll go into 2019. In 2019, 4,912 closed sales. In 2018, 5,774 closed sales. In 2017, 5,998 closed sales. So you can see we've had more closed sales in March than we actually had any time between 2017 to 2019. Now, the biggest reason that we're seeing homes increasing in value is just because that the supply and that demand, right? There's just so much demand for homes that these homes are selling so much quicker. Angel, what catches your attention about what I just said right now?
Yeah, I think you wrapped it up good because it could have been a little confusing, right? Like you said, the amount of homes sold in the month of March compared to the last 5 years. So I think it was more, right, than any other month.
Yes, we sold more homes than any of the last 5 years, correct.
So, but it goes back to, again, we're selling homes. That's not the issue, but I think Anthony wrapped it up perfectly. It's just there's so much demand for housing right now. It's
selling
insane.
Faster. Mm-hmm.
So they're selling quicker. There's not enough inventory, right? It's simple economics, supply and demand. And, yeah, I mean, that's the issue we're having now. Very curious to see how all this comes together. You know, February, the homes that were closing in March most likely locked their interest rates in the month of February or March. So rates even a month and a half ago are a lot better than what they are right now, right? So, and I just want to see how long the market can keep up, because $50,000 in 1 month is insane, right? Mm-hmm. So if you're going up $10,000, okay, it's a little bit more understandable, but $50,000 is a lot to a huge increase, right? So those rates, again, they're probably in the 4s. Some people even locking in the 3s. Mm-hmm. Now, again, it's going to be common. Conventional rates are in the 5%, which sounds insane, but it is what it is. And they continue to increase. Again, they're approaching 6%. What does all this mean? We always say the higher the interest rates, the lower your buying power, which would assume, historically speaking, takes an effect onto what the purchase prices are and sale prices. So I'm very curious to see over the next couple of months with the increase in rates, if that has any effect on people able to afford this. Obviously, you're not going to be able to afford the same. So is it going to have an effect on the average sales price? Are we going to see a decrease, or are we going to see it gradually increase? Not such a big increase of 50,000. I think I'm very curious to see how that comes into play.
Yeah, exactly. I'm very curious as well. I mean, there's something I want to talk about quickly, and then I'll go back into what you just said, Angel, because I want to pose a question to you and see what your thoughts are about it. First thing is the median sales price. Angel, how much do you think has gone up year over year? From right now, March 2022, median sales price in Los Angeles County is $870,000. What do you think it was in March 2021?
Maybe around 700, around there.
So in March 2021, 775,000. So home prices have increased, roughly $95,000.
Almost, excuse me, I would say 750, but
yeah. So roughly $95,000. So it's up about 12.3%. If there's anyone that has purchased a home, and it's been over a year, likely you've reached about 20% equity if you came in with 3.5% to 5% down. So I'm just giving you guys a heads up or you homies a heads up that you should probably hit up your lender and be like, yo, can we get the property reappraised? Don't necessarily refinance because interest rates are not that good, but hit up your lender, see if your lender can reappraise the property and try to add that extra equity that you gain since homes have appreciated, to see if that'll push you over that 20% mark and help you remove that mortgage insurance. So I wanted to give you homies that heads up now before I forget. Yeah. And then Angel, the question that I wanted to pose to you is, home prices are increasing quite a bit, although interest rates are on the rise. In January 2022, when interest rates really started to aggressively rise, median sales price was $825. Right now it's $870. So it's up, almost $50,000. Interest rates are about 2% higher. Now, interest rates may drop to about 3.5%, probably around 3.5% again, under 4%, likely in the next year to 2 years, right? To pre-pandemic levels.
Correct.
Anyone that purchases now, knowing that interest rates are likely going to drop, knowing that everyone else's purchasing power is going to go back up, and knowing that if everyone's purchasing power goes back up, home prices go back up, do you see another opportunity where someone that purchases now is going to be able to find themselves in a year with when interest rates go down, another percent or two, with 15-20% year over year gains and appreciation, very similar to what we saw when pre-pandemic it was 3.5% interest rates more or less, and it dropped to 2.5%. Everyone's purchasing power went up 10%, and now we saw this crazy appreciation, right, of 15-20%. Do you see another opportunity like this happening right now with the current state of the real estate market?
You literally read my mind. That was going to be my tip to people who are getting discouraged by the increase in rates. There's two things I see happening, right? One, in my opinion, I think the market's turning already. I think it's still competitive, but I think it's less competitive now. When I speak with realtors, I know it sounds funny, but they'll be like, yeah, there was only 7-8 offers on the property, which before it was 15 to 20 offers.
Yes.
So I think people's buying powers are coming
60
down.
offers sometimes.
60, yeah. And I'm sure if the right properties out there's still going to be those super competitive homes. But in my opinion, again, I think the market is turning, right? I think it's changing a little bit. People are getting discouraged by the increase in rates. People aren't qualifying for the same amount. And again, so what's in turn happening is it's less competition. Still competitive, but just less competitive than it was even, I would say, 3, 4, 5 weeks ago, right? That's just my opinion of what I'm seeing in the market.
Yeah.
Right? And I think Anthony really touched on a good point is I believe rates are going to go down. I don't know how low they're going to go down, right? We don't know if they're going to go back to the 3s. I don't think they're going to be in these high 5s, 6, close to 6% range for a long time. This is my personal opinion. I think by the end of the year, we're going to see a drop in rates again, right? Right now, it's just all trying to fight inflation. So they're bringing, interest rates are just they're raising it quicker than anybody thought they were going to raise it at this pace. It's insane. But with that being said, there will be, in my opinion, there will be adjustments to the rates towards the end of the year. So what does that mean for you buyers that are getting in now? Yes, you're going to have to deal with the higher rates. I will admit there's no promise that it's going to make sense to refinance, but it's just my personal opinion, based on what I'm seeing and what a lot of other professional economists are seeing is that rates are going to drop, right? So how Anthony said, take advantage. Yes, get into the house, be comfortable with the payment. We can never promise that something's going to happen. We don't know that for sure.
Yeah.
But in my opinion, you're not going to have that high rate for the rest of the life of the loan. You may be stuck with it for a year, 2 years. Usually people refinance or sell their house within the first 7 years of having their home, right? Or even within the first 5 years of having the property. So what does this all mean? To wrap it up is you get in with the higher rate, and then let's say by December, January, February of next year, rates go down, you just refinance. Not only do you refinance, but how Anthony said, you're going to have equity on your property now. So maybe when you refinance, not only are you lowering your interest rate, you can possibly remove mortgage insurance if it makes sense. And more importantly, you have equity and you have a house, and you're possibly going to be in a less competitive market than you would see in January or February, right? Again, no guarantee that rates go down, but it is something to highly consider, to not give up in this market and actually look at it, Anthony said, as an opportunity to get in while people are getting discouraged and actually getting out.
Yeah. Yeah, that's a good point right there, Angel. One last question, something you may know. So interest rates are on the rise. Interest rates is something that you can write off, right?
Your mortgage interest, yeah. So I don't get too much into tax stuff just because it's not my profession, but so I don't know the exacts on on how much you can write off at interest, but interest is tax deductible.
Okay. So, I mean, that's the one benefit of there being an increase in interest rates is that it is a tax deduction.
Exactly.
But yeah, I mean, with that said, homies, I hope this gives you a pretty good idea of the Los Angeles County real estate market. Keep your heads up. It's only going to get better. People that are able and willing to purchase now and can afford those monthly payments, there may be another opportunity, wink, wink, for prices to increase 20% year over year when interest rates drop down again to, under 4%. With that said, I want to wish you all the best. Take care and stay safe.
Thank you.
Hey homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.